Hello everyone. In this video I am going to explain how you can easily and quickly create a net present value model using Excel and how you can easily and quickly calculate IRR, internal rate of return, payback period and other metrics using the same model. So let's quickly start with first of all here. I'm just going to so let's calculate the model for 10 years maybe. Okay, so there are few important component to be able to calculate net present value model. We need to calculate discounted cash flow. So first of all we will do is investment. Suppose you invest $1 million on a project on the first year. Let's select all of the cells here and put dollar signs for your convenience. So the investment is 1 million, so you should always put with a negative sign. Now it's put in the 0 year, means investment is done before the start of the year, before any operations. Similarly, now you should put all the costs and expenses and all the cash outflows here. These are cash outflows. Similarly, you should put direct cost, which would incur by the end of the year. We always calculate using end of the year, say 25,000 for the first year. Let's put this with a negative sign, and let's also add a brief assumption section. Let's put assumption sections. Let's add few more rows. Let's reduce the zoom for visibility. Now first assumption is discount rate. You should always put discount rate to work with NPV and DCF. To explain, discounted cash flow model is also known as DCF. So discount rate, let's say 10%. Similarly, we need to calculate annual inflation. Annual growth. Let's say annual growth in expense. Similarly, annual growth in cash inflows. Now, since direct cost is an expense, we must grow that by the rate of annual growth in expenses using this formula and link with this cell and lock the cell, right, like this. Press F4 to lock the cell and select. It is still 25,000 negative, means we haven't put anything. Let's say there is 15% growth annually, so it will keep increasing by 15% annually. Let's select all the rows and press Ctrl plus R. Let's increase the row size for a better visibility. Select 12. Now another metric is called, let's say it could be other cost. Other cost maybe like direct cost, including, for example, for a manufacturing business, direct cost includes timber or anything which is directly related to the cost of production. Now other costs may include utilities, rent, something like this. So let's put it 50,000 per annum. As always, let's put in a negative sign and let's link with control D, so it will all automatically link with annual growth in expenses. Let's do control plus R. Now total cash outflows. So we need to sum everything using this. As always, press Ctrl plus R after selecting. Let's bold this row. Now we need to create another section called cash inflows. Cash inflows means all the cash revenue and other cash inflows. Let's say revenue. Suppose you started earning revenue hopefully from the first year. That is really fortunate with a project, but let's assume this. Assume that you earned 50,000 on first year. Let's not put here negative sign, and let's assume annual growth in cash inflows of 20%. You must put something like this to impress potential investors, but that must be accurate. You shouldn't exaggerate this. Now let's link with this. Press Ctrl plus F to lock the cell. Now as always, press Ctrl plus R. So since there cannot be any other inflows, I mean there can be various other cash inflows, but for a simplistic model, let's assume this is the only inflow and this is the total cash inflows. Let's do some of this. Press Ctrl plus R. Let's bold. Now we need to find out net cash flows. Net cash flows. So we need to plus this and this. So this will give you net cash flows. Let's bold this. Now we need to do a present value factor. Present value factor, the discounting factor which discount the future net cash flows at the today's date. It is done using the discount rate. How we do this? Let me explain. Present value factor. Well, here is the formula. 1 plus the discount rate. Lock the cell. Close the brackets. Then add this minus the year. Just use Ctrl plus R. Reduce the decimal for nice presentation. Select all and bold. Now present value for respective year must be multiply present value factor with the net cash inflow, and then use Ctrl R, and this formula would be replicated to the 10th year. Increase the column width again for better visibility, like this. Maybe some more. Let's bold this. Now we need to determine net present value